lot of the other thing is, especially with property management, which to be honest, their goal is like to defend you from time and problems and a lot. You don't pay the plumber to bang the pipes, you pay him to know where to bang.
Yes.
Something like that.
Exactly. Yeah, exactly. If you're new to our channel, my name is Koukun. I'm a realtor and mortgage broker here in the Niagara region.
My name is Ryan. I am a realtor here in the Niagara region.
And yeah, if you're interested in connecting with us, there'll be links in the description where you can book a call to us. All right, let's get into it. So I guess if we pivot the conversation a little bit, so now you own a triplex in Toronto, you've purchased more than a few rental properties, had a lot of learnings, but also a lot of success along the way, right? Quite a few of them have built you equity. You've built like this little base of real estate. I know recently you went through a bit of a tough time with your job. They've decided to, why don't you share about that?
Yeah, they made some cuts. Look, man, I work in tech, I worked in tech, have for a long time. I was with that company for 5 years, and it's not a very good time right now to be in that industry. And it's not the only industry doing layoffs, but like, I can't pretend like it completely caught me off guard.
Okay.
You know, where it happens, how much of the workforce it happens, what teams or people are affected by it is a little bit of a dice roll in my opinion. Mm-hmm. But the industry was definitely exposed to it and is. And if you look at like the numbers over the last few years, there was a massive wave kind of early 2023. There's another massive wave kind of going on right now. I hope it impacts no one else, but like I was caught.
Sure. Yeah.
And I honestly like, my portfolio is not in a place where I'm like, I don't care because like I got so much cash flow. Like I think that's where people want to be, right? Where you become bulletproof.
Yeah.
But I mean, if you're doing this over the long term, and again, like you have the ability to hold it independently, that's the huge thing is, are you subsidizing these properties? Because then if your income goes away, it's not just your cost of living. Like you gotta dump these assets fast.
Well, let's talk about optionality here, right? If you say needed $100,000 to sustain, maybe you don't need $100,000, but say you needed $100,000 to sustain your lifestyle for a year without working.
It's a pretty good life.
Are there properties in your portfolio where if you were to sell one of them, you could walk away with 6 figures to cover your lifestyle?
Yes. Yeah.
So that, yes, it's not cash flow.
Totally.
But
still provides some security.
If you need it, obviously the goal isn't to sell assets, but you have it, right? Versus if you didn't have assets and you lost your job, now what do you do?
Completely.
Right? You're desperate almost to look for the next thing.
It gives you another really big shoot to pull. And the larger, obviously the larger your portfolio is broadly, the more you have to pull. But if you're building it sustainably and slowly over time, like
I think that's big. Building it's just because you say you bought a couple properties at the peak that aren't cash flowing, that you're losing $500 a month, and that you're underwater $50,000.
Yeah,
that's not.
That's the one you have to dump, and always like when it happens and you have to dump it, it's in a bad market.
Of course,
right? Of course. Otherwise, you would right? So like my layoff was also correlated to like a bad market, and those are not necessarily independent. If you work in real estate, now all of a sudden they're correlated. But anyways, totally. And I think it gives you more shoots to pull. And I will say like my kind of like investing thesis, so to speak, has sort of become like, if I'm not willing, able, and happy to hold this property for a cycle, let's call it 7 to 10 years-ish historically, it's probably not something that should be in my portfolio. And like, easier said than done, right? I started buying in 2016. We're basically at the first cycle end for one property.
For the first property.
For the first property.
Yeah.
And the other ones will slowly come, right? We're 8 years past that. And so the other ones will meet their criteria. But like, if I dumped that property, the thought, and this wasn't the thought when I bought that one for sure. This is the thought when I bought some of the latter ones. The thought is that there's probably going to be some time during that period where the market got destroyed, right? But it's okay. But I don't really care in the macro. Right now we're in that period for something that I bought 2 years ago or a year and a half ago, right?
Yeah.
And if I, like you said, if that was the one I needed to sell to support my lifestyle, we'd have big problems.
Yeah.
Right? But because of the previous bullets, right? Like, it might be okay.
Yeah.
And it does give you some confidence without the cash flow. Yeah. And that's the big returns on real estate, to be honest with you. Like, whether you have a small, a large, an old, or a new portfolio, maybe not new, that's the exception. A small, a large, medium, but sustainable long-term portfolio. And you look at anyone who has sold, in terms of the portion of where the returns came from, it's like 80 to 90% are appreciation.
Yeah.
You got your tax advantages, you got your cash flow, your mortgage pay
Yeah.
down, but like it really is the long-term appreciation.
No, for sure.
Yeah, and I think the one other aspect to all of this is you have and had a good career, and I'm sure you're going to find the next thing as well. But even as you were working hard in your career, progressing, learning,
Yeah.
that wasn't the only thing you did. You were building up this portfolio. So now in this unfortunate situation, you're not starting from scratch again. You have this thing that you've been building while things were good at your career, versus maybe someone, if their career was the only thing they built for year after year after year.
Right.
Because like we've all also seen scenarios of the situation where if you're a business owner and your business is the only thing you do, and you put all your capital into the business as well, and in the unfortunate situation where your business goes under, then you lose everything.
Yeah.
Right? But here, like you said, you're in tech, real estate is your investment, which is also interesting. You could have put that into tech sort of stocks or like even the company you worked at, right?
Yeah.
But now you have a nice balance where you're building a career in a lucrative field while you're building investments that have the potential to really grow the equity. Right?
Yeah, and I think you make a really good point. Like whether you're a business owner or an employee or some combination of the two, I think like I try not to be 100% exposed to one industry, because it's inevitable that an industry at some point is not going to do well.
Yep.
Right? And like I have a friend who works at one of the big banks, and like we always joke about the fact that like he's employed he's got a mortgage with them. Like he's a lot exposed to that bank, right? But like jokes aside, I do have like a sizable enough portfolio of non-real estate, and for the longest time I was like convinced that I would privately lend it, and I was like, man, like the returns are good, I've got enough that I could do it if I really wanted to, but like, do I really want 100% of my exposure to be on the same asset class and the same? Like, probably not. And I do believe also as well that like your portfolio should roughly reflect your competencies as well.
Yep.
Like if you are a huge real estate expert, like why shouldn't you be a little bit overexposed in the industry that you know well?
Mm-hmm.
Right? Like, I want to give that some kudos, but
You can find diversification within an industry as well.
Totally.
Right? Like
Totally, especially real estate.
Yeah, like
Especially
if you got one place in West End Toronto, another one in Mobile, Alabama, like those are two very, very different markets.
Totally.
You know what I mean?
And then there's like residential,
commercial,
right,
and even in commercial, there's different asset classes with that as well. So, but yeah, you make a really good point that like you got to kind of stick to your strengths. How did you find like, did you kind of do anything, like you obviously had some skills with your job and everything like that. Did you find that helped you in real estate at all? Or was that just,
Yeah, that was a learning that I took too long to like understand or appreciate, I guess. Like I thought about them independently, mostly because like your time is spent independently.
Right.
Like I'd either be doing real estate work or be doing work. And I didn't realize that like I had a career in operations, and there are a ton of operations to accomplish in your real estate portfolio. And it's funny because like when I figured it out, or like kind of came to the conclusion that I had been using them, like I had been like streamlining the process of finding tenants is like one example, right? And then I was like, man, like at some point I want to offload this task, like if my portfolio is big enough, but like I want to keep the fact and the value that like I can add value to this process. And how do I do both? Well, there's like a lot of things that aren't procuring tenants that are still important in terms of operations, right? And B, like I can be an advisor to whoever it is that I do hire without being too pushy. And this is actually really good, like.
So you're thinking when you got fired as a
I'll go there, and I'll get back into like the skill of like what you're using your main skill, because that was a big learning. But like, yeah, quick tangent. Basically, I went through a few different property managers before I found the one that I'm working with now for the most part. First one I got rid of really quickly, mostly because they brought me a tenant with a ton of red flags, and I was like, this person just doesn't know what they're doing. I don't know why I agreed to this. Terrible. Pulled the chute out, and they were okay with it. Second one I hired, thought that they did a really good job. the long story short is I asked them way too many, way detailed, way too frequently questions about the things that I was used to doing. I had a pretty high bar for quality for tenants, not just ones that we were getting new, but also like existing ones, managing them. I was used to having personal interactions with them. And I just asked this property manager too much detail. Now, the only thing I will say on my end is that they probably should have said, "We'll back off." First, they didn't. They just one day were like, this is not a good relationship. So I will like hold them to account for that. But other than that, I definitely was going too deep. And this was just like me not understanding that there's a middle ground that you need to accomplish.
Yeah.
Like ultimately, if you had access to 100% of your time, and this was the only thing that you were doing, and it was your portfolio, you would probably do a better job than most others.
Yeah.
100%.
Right?
100%.
The reality is that's not the case. You probably have something else to do, and where do you want to focus your time? And if it's not this, you should be okay with not 100%. You should be okay with like maybe 90%.
Yeah.
There's going to be a few things that are missed here and there. Make sure they're not major. Hire to account for that.
Yeah.
Hopefully, in the best case, you can hire somebody who's better than you at that. Like my current property manager definitely catches things that I wouldn't have caught.
Yeah.
But like the value of time was, you guys know, right? Like what I ended up finding a premium on. And one of the learnings, I'll say, was I basically went to any future property manager and right up front, irrespective of the agreement that you signed, that's obviously critical, but in addition to or over and above that, have a conversation and be like, all right, here's the type of communication we're going to have. Here's at what frequency. Here's the medium that we'll use. And here are the thresholds, right? If a decision is made below that monetary threshold, like you have the autonomy, go do it. And we've revisited that conversation as the portfolio has grown. Right?
For sure.
Number goes up, tenants go up, you have more autonomy, I trust you more. You've made decisions and it's gone well. If you made decisions and they don't go well, maybe the thresholds go down. Like you know, you have to manage the relationship. But having that upfront agreement has been insanely valuable.
That is like we talked about managing the relationship with your tenants earlier, but managing the relationship with a property manager or whoever else
because they're managing the other relationship, right?
Contractors, even like everything like that. That's something that I think a lot of people, particularly in this business, take for granted. They think, I hired you, you should take care of everything in terms of managing this relationship. But it's like if you don't talk with your contractor, with your property manager about what your expectations are and ask them what their expectations are, you're just leaving.
Because you make a lot of assumptions without realizing it. Like
100%.
I've dealt with contractors that, quite frankly, like probably do really good work. I know they do good work because I know their other clients, and pricing is good. We've had communication problems, and I was like, this probably won't work if I hire you to do this really big job.
Yeah.
Like there will be friction here, and it won't be because of the quality of your work. It'll be because like we can't communicate, and I won't know what's going on to the extent that I want to and need to.
Yep.
Right? Contractor that I work with right now, for the most part, that I work with for the majority of the work that I do, we communicate very well, and that's I would pay a premium for that.
Yeah.
Right.
Absolutely.
And so like that, it's just I guess it's just a piece of the relationship that I didn't value enough early on enough that I've like come to appreciate, and I had to get fired from a property manager probably to appreciate it enough. But yeah, it's a big part of the game.
I think this is a golden nugget, right? There are these two camps of I'm going to do everything myself. I'm going to do the renovation myself. I'm going to be the property manager myself because I can do it better than everyone else. I'm going to care. And then there's this other camp of I'm going to hire the professionals and almost just let them do whatever they want. But both don't really work. Like what you've described is this middle ground of I'm going to hire professionals. I'm going to pay them, but I'm not going to let go of the responsibility that comes from being an owner because I'm going to care more than the people I'm paying.
Right.
So it's still up to me to check that things are being done at a high standard, and they're going to almost do better work for you than their other clients just by you showing that you care about this property and you care about the work they do.
Totally.
Right.
Yeah. There's an autonomy piece. There's a competency piece.
Yeah.
Right. There's a communication piece. I think like I with my experience doing a BRRRR that was not a full conversion, I came to the conclusion that I want to hire somebody to project manage a conversion. Because I was like, that would be the end of my, honestly, like capacity, let alone competency. to manage all of the different trades coming in and out at a certain time. Like you gain an appreciation when you do a part. If I didn't do that burr before, I may have bitten off more than I could chew on the conversion and tried to do it myself.
Yeah.
And been tripping over contractors and like not able to, because I'd never done it myself, right? Yeah. So I'm kind of lucky that it went in that sequence, but you have to consider all of those pieces before.
And even like you share how you were too involved when working with a property manager. Definitely. But you still put in the time to do leasing and property management yourself first, so that when you hire a property manager, you know what's involved.
Yeah.
You know that they're not just collecting a check every month. There is work that comes up that they are doing on your behalf. So you have an appreciation for what they bring to the table, right?
Yeah, and I think one is like a big credit to the fact that I had my mom as the background, right? Like she was my litmus test. She kept a very high bar for tenants. There were times where I had to say to her, like, this isn't the market you're used to. You don't have the same candidates and profile. Like we're gonna need, you know what I mean? But I think a lot of the other thing is, especially with property management, which to be honest, their goal is like to defend you from time and problems in a lot of cases, right? And do the things without you even knowing. And then like you pay them for their time and their expertise. There's a lot of instances where like things are going really, really well with a tenant, no problems, or at least it seems that way. You just don't know about them. And you're like, man, am I like wasting money on this? Like, is this like real? But when it goes poorly, that's when like it all, right? So it's just it's a big cycle.
That is the funniest thing about property managers. Everybody, when things are going well, nobody wants one, and everybody thinks they get paid too much. And then
things are going bad.
And then when shit hits the fan, almost everybody
help.
Wait a second.
What do I do?
Yeah.
And I think there's a little bit of it's like the story of the plumber who's experienced, who comes in and like spends 5 minutes to solve a problem that 5 other plumbers couldn't. And then he gives a bill for $10,000. The person who hired him is like, you just spent 5 minutes here, right? But that was a lifetime of experience to know exactly what to do in 5 minutes. Like I think in property management, like one of the things I value a lot is a property manager's ability to find a quality tenant who's not going to cause problems, and then maybe their job's easier afterwards to manage because the tenant's kind of treating the property properly. And it may bring up those feelings of what am I paying for, but it was kind of the work they did to set it up well from the get-go to avoid the problems, and how both you and them don't have problems to deal with, right?
What is it like? You don't pay the plumber to bang the pipes. You pay him to know where to bang.
Yes,
something like that.
Exactly.
Exactly.
But yeah, that was a learning for me for sure.
So I guess you now have this experience, this portfolio in real estate. You've now kind of gone through this career change. What's on your mind, call it for the next year, 3 years? Anything that's ideas you want to explore or directions you want to go?
I think I've always kind of wanted to start or run, or maybe both, a small business. And so I'm taking the time to seriously explore that right now, in parallel with looking for a job. I don't know which comes to fruition first and which opportunity is best. Obviously, one is a higher risk than the other. But my real estate portfolio gives me the confidence, the ability to actually explore both seriously and not just be in like emergency 911. I need to get a job right now mode. Otherwise, I need to start.
Well, even your home, right? Having 2 units rented out.
Totally. Look, whether times are good or bad, like subsidizing your mortgage is like huge. Right? It's just you recognize it more when you're in a tough spot. When you're in a good spot, it's like nice to have. That's it. That's the difference.
But that's almost the same as taking less risk in general, right? If during good times, it almost doesn't seem to make sense to take less risk, but in tough times, like, not having this huge monthly liability, it saves you, right? When you lose your income, you're like, oh, wait a second. It doesn't cost that much to run my household. I'm in not as bad of a spot as I could be. And in the good times, you save more. Maybe you spend more, but you're spending it because you choose to, not because you have to, right?
Totally, yeah. Being able to be patient with the decision there's like so much value in that.
Honestly, I feel like you've done so many things well that maybe not everyone can replicate, because there's a certain aspect of your abilities, like you said, with your career on the operation side, your willingness to explore new markets and sort of do these investments, these projects that, like, I wouldn't recommend someone to get into a triplex conversion on their very first investment.
Same.
But if we really take it back to the first steps you did, being intentional, just saving money, getting your first home purchase done in a very intentional way to keep your costs low and really set you up for the future, those are things that people overlook how important they are, how much of an impact doing that right up front early in your life as much as possible.
Mm-hmm.
And then, if someone watching this chooses to, they can go the path that you've gone. But even if you look at Michael Lombardi, who didn't do all of your real estate investing other than simply that first few steps, you save money, you buy a triplex, you are still way further ahead than most people your age just from doing those 2 steps, right? Continuing to save money, working a lucrative job, and having a property in Toronto with 2 units rented out. So
yeah, I think like, and my thinking since I made that purchase has changed a little bit, but I didn't really look at the time. What I thought was, all right, I'm going to buy something that's leveraged. Hopefully that leveraged asset creates value over time. So, and again, like, money was cheap at the time.
Sure.
So I was like, well, I should, in theory, try to maximize that. I should try to maximize the thing that's going to grow without me needing to touch it. I wasn't thinking like, I want a sustainable portfolio like it seems like that today, but it really was not like that at the time.
Yeah.
It's hard to articulate that. But I don't know, like, quite frankly, if I were starting from day one at the time and I knew everything I know now, I may have not had the naivete that I had at the time to buy in the city.
Sure.
Like, I may have left. I may have been like, let's try and get something as accessible, cheap as possible, that's going to cash flow as much as possible, right? Like, yeah, that's when I started talking to investors in the community, which was only a few years after that. That's where the conversation was. It was like, cash flow, rates are low. Like, I think a lot of people today now, after the last 18 months or 2 years, have this like scar on them of I either had to liquidate the property, or I came really close to having to, or I had to give up a few other things in life in order to like subsidize this property. They've had to make tangible changes to like keep this portfolio afloat. Yeah. And they'll remember that. I will remember this, right? Like,
well, even look at this situation. You still own a property in Toronto. You still have a mortgage on your primary residence, right? And you're up for a mortgage renewal in this year. This year, right? Yeah. I've spoken to now a few people who also either live in Toronto, live in like the GTA, right? Where they have told me that they have variable rate mortgages where the payment has gone from $2,500 all the way up to $6,500. Many of them don't have income suites, right? Yeah. And some of these situations are ridiculous. It was like 35% of their income before it increased. Yeah. That increase is like not sustainable, like literally not sustainable. Yeah. And
basically they have a deadline.
Yeah. Yeah. So I think what you've done gives you options. Now, obviously losing the job is tough, and I'm sure you will have your next steps. I think the skills you've built both in your career and in investing, all these experiences bring value to the table, right? And I'm sure it's going to open up some doors for you.
Yeah, I think so. And like, we could talk forever about like how nervous or how like mentally impacted you should be by losing your main source of income. And I think it's funny, like when I was first out of school, I had a management job, kind of got like one of these rotational management programs that all the big banks and telcos and consulting companies had at the time. And I was basically dealing with someone at work who was, I don't remember if she made a tough decision. I remember exactly what happened, but she was crying. Like, she was like beside herself about something at work. And I was just like, I just don't like mentally, right? I was like being empathetic, but I was like, I don't understand why this impacts you so much. Like if I made a mistake and I got fired, like I was 22, like no big deal, right? But this girl's like 25 years into a career. She's only ever done this work. Like this would be huge for her to lose. The stakes are just so much higher.
Yeah.
I didn't consider that at the time.
Yeah.
But like now I'm 10 years into career, so I'm definitely not where she was. But like the stakes are a little bit higher, tangibly higher for me today than they were at the time. And as my career progresses, they will only continue to get higher, especially if it's my only source of income. So what that has done, I think, is like give me more confidence that building a portfolio or something on the side that can sustain you, not just from a cash flow perspective, to your point earlier, but to like a pull the chute, I have these other assets which have equity built up over time, will do. Right? So like it's a safety thing. I guess it's a risk tolerance thing. Ultimately, for me, it's like a bit of a like mental health like helper, I guess.
Yeah,
sure.
And it was things like that early on where I saw people, and I don't know what her personal situation was. I don't know how vulnerable or not she was, but it clearly like it was impacting her mentally.
Yeah.
Clearly she was upset by this thing that could potentially result in her losing a job. And I was like, I never want to be that vulnerable. Like, a lot of people are in that spot.
I think that's one of the untold benefits of doing extra work before it's needed. Like investing in real estate was extra work for you. You had a full-time job. Mm-hmm. You have tenants in the home you live in. Like I've experienced that. I know it comes with pros and cons. Not everything is sunshine and rainbows, right?
Yeah.
But doing the extra work and taking the additional stress, right, before it's required of you, then when you're hit with a situation like this, you have options. Versus if you coasted when things are good, make a good income, buy a home you can afford, and just coast, now when external factors hit you, you're forced to react.
Yeah, right? You want to make the decisions when you want to, not when you need to.
Yeah.
It's almost always when you need to. It's because there's a problem that's forcing you, right? So I agree. And like, it's not like I've ever run a small business or been my main source of income, but I can imagine, and I have enough like friends in the game that, you know, if your source of income goes away and you are employing others, there's a whole other layer to that. If it's only you and it goes away, now you have to deal with the things that we were just talking about. Yeah. So it's similar to losing a job, more similar.
Way more similar.
Way more similar, right?
Yeah.
If you're responsible for the livelihood of these other people as well, now it's like a whole, and that's honestly one of the things that I'm thinking a lot about in terms of starting or running a small business. There's a lot of businesses for sale right now.
Yeah.
Wow.
There are a lot of, and this could just be a factor of time, like a lot of boomers retiring and they own business. Right?
I think there's a kind of a combination of factors going on.
Yes, for sure. Cost of capital, right? A whole bunch of other things. But I've noticed there's a lot of small businesses for sale, and like there's no transparent marketplace. It's not like these things are on Amazon, right?
Yeah.
But that's happening a lot, and cost of holding, risk tolerance, they all play big factors in these things selling. Anyways, looking at that, considering.
Very interesting.
Yeah.
Yeah. Any final words? Like if someone's been watching it up to this point, it's been a long conversation. Any words of advice, any learnings, any last points to share?
Yeah. One of the things I think that has helped me the most, and you'll probably have noticed just during our conversation today, I've been like, well, my learning in this situation was this. I've made all of those learnings were just mistakes. They were things that I did wrong that I didn't realize at the time were wrong. But afterwards I was like, I like paid to make that mistake, or, you know, lost this relationship with this property manager or contractor or whatever it was because I made that mistake. Like recognizing them as learnings, maybe writing them down as learnings, and not doing that mistake in the future when you take actions. I think that's the important part. So if I can leave people with things, it's that I've developed this openness to learning the entire time. And I think it goes beyond real estate investing, to be honest with you.
It's a way of life.
It's totally. There's this quote, and I don't want to make sure I don't mess it up. It's like, if you're not willing to learn, no one can help you. But if you're determined to learn, no one can stop you. That's how it goes. I don't even know. I wish I could give someone credit. I don't even know who said it, but it's incredible, right? It's like a way of taking in information and being like, my actions are going to be different next time based on this piece of information.
Yeah.
I try to do that.
I think that's a really good one. Koukun always says, I think you said something. I'm going to screw up the quote now, but it's not your quote, but it's somebody's quote. But you say it a lot, where it's like, the teacher will appear when you're ready, kind of thing like that, right? And it's like, if you're not ready to see, like, the lesson could be abundantly clear to anybody who's looking at the situation, but if you're not ready to receive that lesson, then you're going to miss it, right? And so having that, like, working on yourself enough to be able to see that lesson and learn from it and actually implement it, instead of just, oh my gosh, I made a mistake. I'm going to never do anything to make a mistake again, as opposed to being like, oh, this was a good mistake. I can learn from this and take that and then grow from that. Yeah. It's very, very different than just, trying to never make a mistake again.
Charlie Munger.
Is that who said that?
No.
Oh, okay.
But he said, so one of his famous quotes was him and Warren Buffett. One of the reasons Berkshire Hathaway is what it is today is that they love to rub their noses in their own mistakes, versus it is very typical human nature to avoid looking at the mistakes you've made.
Yeah.
It doesn't make you feel great. You feel like you screwed up.
Yeah.
But
like embarrassed. You're like,
yeah.
Totally. It's a human thing.
But exactly what you said, right? Like, if you can learn from your mistakes, every mistake you do is just one step forward. You're just improving.
Yeah.
And then it follows to Ryan's comment about, now you're maybe more ready to learn the solution to that mistake.
Yeah.
And maybe before you didn't even know that was a problem that needed a solution.
Yeah.
Right.
And so, sometimes I think when you learn things, and this speaks to, I think, like, patience a little bit. It's like a characteristic that a lot of people don't have. I don't have very much of it. I try to. Like, when you make a mistake, and even if you can recognize it in the moment, which is best case scenario, usually it takes some time. The opportunity to fix that, or to come to a situation where you need to make that decision again, might be years. Yeah. Right? Like, if I mess up a thing on a deal, like, let's say we didn't get that property we were talking about at that time.
Yeah.
Let's say we were on the wrong side of that. It might be a few years before we come across that situation again, and we can act on the learnings from that thing, right? I don't want to make an offer just because I want to, like, improve the thing that I, like, messed up, right? So I think it's a combination of, like, learning, recognizing the learning, and then when the situation arises, taking the action to do it. Because did you learn otherwise? Like, was it a learning if you just changed things in your head, or was it a learning if you acted based on the change, right? Like, I don't know. That's how I look at learning. Anyways.
Awesome. I think that's a good place to wrap up. Appreciate you coming out here to the city of Welland for us to film this little episode.
Love Welland.
he's almost he's like a half local now. He's been to the Rex, like he knows. He's been
to the Rex. Yeah.
Awesome.
Thanks for having me. Really appreciate it. And I hope we can do maybe a few of these in the future. Also, I kind of wanted to add, like, and I referenced this earlier just like through questions and such, but so I think we did the first deal when I came to Welland together.
Yep.
And then we did the second one and the third one. I try to remember what combination, but like I worked with, Done now. By the way, excellent rebranding.
Done Real Estate.
I really like it. I think I'm going to take this mug home.
Yeah, you can have it.
But no, I worked with you guys for a while now. And I think that, like, the thing that's, like, aside from being good guys and whatever, the thing that I think sets you guys apart a little bit is your unique approach to staying connected with a client, investor or not, right? A client before, during, and after a deal. And, like, I've had so many follow-up calls from you guys about, like, okay, we executed, we closed, like, technically, like, you could just be like, oh, my job here is done. But, like, how did it go? What's going on with the tenants, what's going on with the renovation, whatever the thing was on that property that we were doing, and like taking that away. And I don't know if I assume like applying it to other clients, like you guys are always kind of constantly in this learning mode as well. And I think a good example of that was when Ryan like climbed in the attic of that potential duplex and was like, wait, maybe this could be like, he didn't just come up with that like randomly, right? That was through experience. And again, whether it's an investment thing or not, identifying things in those properties is clearly something that comes with experience and like learning and then continuing that process. So kudos to you guys, but I hope we do more deals together in the future.
Yeah,
Sounds
absolutely.
great.
Yeah, it's very kind of you to share that. And yeah, it's been great working with you for the last few years. I think we've enjoyed learning through the deals we work together as well. And that's something like that Dormer project and like those are really cool things for even us to be a part of, right? And I think that, yeah, we enjoy it. We're glad to be a part of it.
That one's fun. Let's do one of those.
Yeah, absolutely.
All right, let's wrap it up here.